What has been happening at the NPS since the last time we spoke in June last year? I think numbers are also increasing. So, how are things at NPS as a scheme overall top down, and what's been happening at HDFC Pension?
Yeah. So I think two things have happened, right? One is, of course, the number of players have gone up. Last time when we met, I think there were two more players that had got added. So if you look at the way the industry has evolved, right in the beginning in 2004, there were three PSU pension fund managers that started managing money for government employees.
Yeah.
And then in 9, 10, 11 is when a bunch of new, let's say, private sector players took up licenses. Four of them continued to hold those licenses still, and we, of course, those four continue to be pension fund managers as of now. Four more entities got added in the last 2 years, right?
Okay.
So you now have the industry therefore now consists of 11 pension fund managers. 3 of them are public sector undertakings and the remaining 8 are from the private sector. So that's one big change. In terms of adoption of NPS, there has been, I would like to think, a sea change in terms of awareness levels and therefore adoption.
Wow.
So if you look at the overall numbers, the actual number of subscribers since the time that we spoke last around a year plus back has grown by around 25-27%.
Oh, nice.
Both on the retail or the all citizens model as it is called and on the corporate model as well. On the corporate model, we now have close to 21 lakh subscribers. In the retail model, we now have 37 odd lakh subscribers, making it a total of around 58, 59 lakh subscribers in all, which is vis-a-vis a 46, 47 lakh subscribers that we, 42, 43 lakh subscribers when we met last.
Mm-hmm.
So that's one big change that's happened in terms of more awareness, more adoption. In terms of the fact that the new tax regime is what affords you the corporate NPS tax benefit under 80CCD2, which we spoke about last time briefly. Because of the fact that there is a much higher adoption of the new tax regime, a much larger number of corporate employees are now noticing corporate NPS as an option for them because that's the only other option that's available to them to save tax in the new tax regime, right? So therefore, the number of corporates that have adopted has also gone up quite significantly. In fact, a year back, that number was around 12,000 corporates that signed up for corporate NPS, where their employees could opt for corporate NPS and deductions and therefore contribution. That number is now upwards of 17,000 corporates. So it's gone up by almost 5,000. So the number of corporates have gone up, which has started offering NPS to their employees. Subscriber numbers, as I said, has gone up clearly. AUM, of course, has gone up because, the markets have been very kind, right? Last 1 year, 1.5 years, the markets have been on a roll. And therefore, as we speak, the non-government space is in the region of 2.6 lakh crore of AUM, right? So that's the size and scale. In terms of, if you also look at the performance of funds in the NPS, which is the equity, corporate bond, and government security, the three E1, C1, G1, as it is called, or E2, C2, G2, all three of them have done quite well. In fact, it compares very favorably with actively managed universe of funds on the mutual fund side as well. So returns between 35 and 40% on the equity side, between 8.5% and 10.5% on the corporate bonds and the government security side. So in terms of even the performance of funds, things have been pretty good. At HDFC Pension, I think we've seen very, very strong growth. In fact, we crossed the 20 lakh subscriber mark a couple of months back, and I'm very, very happy to sort of share with your listeners that we've crossed the 1 lakh crore mark on assets under management as well. So that's a huge milestone for us. In fact, we were in May 2023 is when we crossed the 50,000 crore mark, and we are now within a matter of less than 18 months, we've now doubled our assets under management to close to 1 lakh crore now.
Some of it is flow, some of it is mark to market.
Yes, a large part of it is actually flows as well. Of course, the mark to market impact has been very, very favorable, but we've seen fairly robust flows. In fact, this year to date, our flows vis-a-vis last year is up by almost 45%.
Nice.
Right, so it's a fairly strong growth in inflows that we've seen as well.
Happy to be contributing to that as being one of that
I know,
number
I know.
for quite some time.
Yeah, more power to you.
Thank you so much. Taxation, can you just give us an overview as to what exactly is the situation now? Because there's always so much that's happening, and this budget, so I don't know, there was a lot of changes that happened in a span of, maybe a couple of sentences. Like a lot of stuff changed on the capital gain side. Now we've got old regime and we've got new regime. There is obviously a transition happening from old to new. Could you just help our listeners understand that as far as the NPS is concerned, what are the tax benefits existing on date, okay, and as they apply to maybe old, maybe new. I just know of the 50,000 rupee benefit that's there, but let's kind of just explain this in maybe black and white in a very simple way.
Sure. So let's first talk about the old tax regime. Under the old tax regime, you continue to benefit from all the deductions that were available, earlier as well, before the introduction of the new tax regime. So under the deductions that are available to an individual, there is 1.5 lakhs under the 80C umbrella, right? Now, a lot of people are not aware of the fact that this 80C umbrella of 1.5 lakhs can also be used for NPS investment. So that's 1.5 lakhs that's available to anybody who's in the old tax regime. The 50,000 rupee benefit that is available under 80CCD 1B, as it is called, is another incremental 50,000 rupees. So 1.5 lakhs plus 50,000, that's a 2 lakh rupee deduction is available to an individual. Every tax filing individual under the old tax regime is available to every single individual, salaried or self-employed, it does not matter.
That's an important distinction. So if you're someone who's like me, a freelancer or a gig economy worker or whatever, you can still contribute that much and still get that benefit from the old tax regime. And that gets knocked off from your gross taxable income straight away.
Okay? Absolutely correct. Absolutely correct. So that's as far as the old tax regime is concerned. Now let's look at the corporate salaried employee, so to say, right? And let's look at what is the treatment for a corporate salaried employee under the old tax regime and the new tax regime. Under the old tax regime, the corporate salaried employee continues to get a benefit of 10% of their basic can be contributed towards NPS under an overall limit of 7.5 lakhs, which captures employer contribution to Provident Fund, NPS contribution by the employer, and superannuation contribution. In most cases now in India, given the fact that superannuation is really not a very popular vehicle for retirement corpus creation, very few companies have superannuation as a product available. In fact, a number of PSUs have also migrated from superannuation to NPS. So essentially, between the employer contribution to these, on the EPF side, which is 12% of the basic, and 10% of the basic, which is NPS, under an overall cap of 7.5 lakhs, you can claim deduction or you can essentially contribute to NPS, and to that extent, your taxable salary comes down. And this is an employer contribution. However, it is a part of essentially your overall salary, CTC, and you choose to carve out a certain amount and you say, okay, please contribute this on my behalf to NPS, and therefore the employer contributes it, and the employer can contribute up to 10% of the basic, which I think is a significant benefit, which again we spoke about last time, and awareness around this is...
The only change was that at one point of time, 2-3 years ago, long ago,
yes,
and I've done an episode of that also on NPS, there was no limit.
There was no limit.
So people, at least those in the high earning bracket in corporate, for them it was like they could make hay while the sun shine.
Absolutely right.
It was actually worked well for them, but that door was closed. They put a limit of 7.5 lakhs on that. Please go on. Sure.
Right. Under the new tax regime, what got announced by the Honorable Finance Minister this time was that the contribution that the employer could make was increased from 10% to 14% under the new tax regime. So if you're a corporate salaried employee under the, choosing the old tax regime, you are still eligible for the 10%. But if you choose the new tax regime, which means that none of the other deductions are available to you, but 14% of your basic you can still set aside out of your CTC, and the employer can contribute, and therefore you can, gain a tax, whatever. I mean, you basically save taxes on the 14% contribution that happens there. So this is as far as the contribution is concerned. The other thing that I want to, highlight is that more often than not, out of the triple E benefit, exempt, what gets spoken about is essentially the investment, the tax benefit at the investment stage.
Yeah.
If you look at NPS, this is the only product which actually allows you unlimited investment in the vehicle. Of course, tax benefit is available to a certain limit. Beyond that, you don't get a tax advantage at the time of investment. However, your accruals are obviously tax-free because it's a market-linked product. And maturity amount, irrespective of whether the money that you contributed was tax paid or tax, where you had paid tax or it was tax-free, the corpus that you generate at the end of the period at the time of superannuation or when you get out is entirely tax-free.
Okay.
Right? So the 40-60 principle still applies. You have to buy an annuity with 40% of the corpus. But the reality is that 60% of the corpus is available to you tax-free, no capital gains tax. And as we all know, even in a active equity mutual funds, capital gains tax have gone up. So therefore, the differential is even more attractive at this point of time. Not only is the cost of management low, which we will talk about,
Yeah.
but the tax dispensation on NPS is extremely attractive in all three stages. At the stage of initiation, up to, of course, certain limits within these two sections that we spoke about, accrual, and then at the time of superannuation.
And there's no product like this in the market right now.
See, if you look at Public Provident Fund, which is a favored vehicle for most Indians, and which rightly so, because it offers you 1.5 lakh and of course gives you you can only invest up to 1.5 lakh in an individual's name. You can't invest beyond that, right?
Yeah.
So there is
Even
no
if
other
you
product.
want to invest more, you can't.
You can't, right? So this is the only product which offers you unlimited amount of investment. And also, if you invest in tier 2, which by the way doesn't have any entry exit load, you can actually move that money from tier 2 to tier 1 and enjoy the tax benefit on that at the time of maturity as well, right? So it's a very powerful
and we're just
feature.
hoping that the government doesn't cap this or whatever. We
Hopefully
never know what
not,
happens.
because this is something that has been spoken about extensively for a while, and one never knows, but unlikely that it will.
It makes a big difference, Sriram. Come on, you're someone who's worked for 25-30 years, who's really taking apart, or rather setting aside 15% of his salary, on which another 15% comes in from the employer over a 30-year period. That adds up to a lot, and even 60% of a lot is still a lot.
Absolutely right.
Okay, are we done with the tax break part?
Pretty much. I think the only other thing that I would like to talk about is the NPS for minors, or it's referred to as the NPS Vatsalya scheme, as the government has named it as the NPS Vatsalya scheme. This is again a product that has been introduced recently, and it offers you the opportunity to start saving for retirement at childbirth. Right now, this might sound a little counterintuitive as to why would you start saving at a very young age for retirement, but just look at the numbers, right? I mean, if you just start saving at the rate of 50,000 rupees per annum in the child's name, let's say till the age of 18, right? Even at very conservative returns, you could potentially end up accumulating around 25-26 lakh rupees, right? Now you bequeath that essentially becomes the starting point for the individual when they attain majority, right? Now when the individual as a child grows into an adult and starts contributing to that and starts off with the 25 lakh, 26 lakh kind of a corpus, the end goal that you can get to can be 9 crores versus 1.5 crores if you started at the age of 25. So therefore, the power of compounding that we keep talking about all the time, when you actually break it down into numbers, it can actually have a 6 to 7x impact.
0 years, 25 years.
That's correct. You start at 0 versus start at 25. The corpus that you can get at the time of superannuation can be dramatic. So I think it puts the individual on a very solid footing right at the initiation, and I think that is an important element. And of course, all parents would like to do something, right? I mean, most of the child products get sold on the emotional pitch, and I think there is a very compelling case for individuals to start saving in the child's name and then put them on a good footing as they get onto a salaried job or start earning.